Hello guys, hey, welcome back to my third YouTube video. In this YouTube video we're going to study about forex terminologies, pips, lots, leverage and margin. So like most beginner traders wonder what is a pip, what is leverage, and all those things and all those new things in trading. So as a beginner trader, before you enter the forex market, you need to understand pips, lots, leverages and everything. So the first topic is what is a pip? A pip stands for percentage in point, the smallest standardized price move in a currency price. Knowing pips is the foundation of every forex calculation. So pips are literally calculations of forex. So when price moves up and down, it moves in pips. So you need to understand what is a pip and everything. So 0.001, the standard pip value for most pairs, fourth decimal place, e.g. your USD. So you must understand like what is a pip. So you must understand like what is the standard pip value for everything. 0.01 pip for JPY pairs, second decimal place, e.g. USD JPY, like GBP JPY. 10 points of fractional points, fifth decimal place, 10x smaller than pips. The bottom line, if USD moves from 1.10502 to 1.1051, that's a 1 pip move basically, meaning that if it moves to the next number, as it moving from around like 51 to 52, that's a 1 pip move. So it means that is how price moves. It means that's how the forex pairs move, most especially EU, USD and all the other pairs. So pip value and calculations. Pip value tells you how much each pip movement is worth in your bank account. The formula, pip value equals pip size divided by exchange rate times lot size. For USD accounts on your USD, 1 pip equals to $10 per standard load. So it means that 1 pip is equals to $10 per standard load. So it's also very, very key to also understand that one standard load is equals to 10,000 points. 1 pip is equals to $10 in a USD pair. Mini and micro lots. Mini lots equals to 10,000 units equals $1 per pip. Micro lot 1,000 units equals to 0.1 per pip. Cross pairs. For cross pairs, what do we mean by cross pairs? Cross pairs are the exotic pairs. So it means like pairs like USD rupee and all the other pairs. For pairs not quoted versus USD, convert the pip value using the current exchange rate. A lot is a standardized unit of trade size in forex. Every trade you place is measured in lots. So what does it mean? So like every trade we take in the forex markets is measured in lots. So it means that lots determine the money that you make. As a micro lot, 1,000 units, 0.10 per pip. Instead, like with smaller lots like 0.01, 0.02, 0.03, it's very, very good for beginner traders because it helps you not risk too much money when you're starting, but also take the process a little bit slower because it's going to help you grow as a trader. Mini lot, 10,000 units, $1 per pip. Best for traders scaling up from micros. So like mini lot is best for traders. It's for intermediate traders who are starting in trading. So that's what it means. So like if maybe like 0.1, 0.2, 0.3 is standard lot, 100,000 units, $10 per pip. Best for funded or professional accounts. So at $10 per pip, so it's best like for traders who are already up there, for traders who already have the skill set, because they know what they're doing and they've been in the market for a long period of time. So it's easier for them to risk the money that they can risk because they already have the experience. But for a beginner trader, you need to at least start with the micro lots because it's going to help you scale into the market or come into the market more and to grow better by not risking too much money, which is going to affect you in the long run. So it's really, really key. What is leverage? Leverage lets you to control a large position with a small account of your own capital. It is expressed as a ratio 1 to 100, which means $1 controls $100. So like leverage amplifies the kind of money that you can risk in the market. Because like some of us may come into the market like with smaller capital. So like leverage can help us to risk what we may not have in the market. The ratio 1 to 10 You deposit $1,000, position size $10,000. 1 to 50, $1,000. Position size $50,000. 1 to 100, $1,000. Position size $100,000. 1 to 500, $1,000. Position size $500,000. So it means that you can risk literally the money that you don't have. So it's going to help you to trade and to also maximize the profits that you can make in the market. Key facts: amplifies both profits and losses. Regulated brokers cap leverage like 1 to 30 in EU. Higher leverage equals lower margin required. Use with risk management only. Higher leverage magnifies losses just as fast as gains. 1% move against you at 1:100 wipes your margin. What is margin? Margin is not a fee. It is a security deposit your broker holds while your trade is open. Required margin: the deposit needed to open a position. Formula: bed size leverage, used margin, total margin locked up across all your open trades. Free margin: equity minus used margin. This is how much you can still trade with. Margin level percentage: equity equals used margin times 100. Brokers issue margin calls when this drops too low. So like a margin call means like usually your account maybe is at $0, or maybe like your account has been wiped out like when you lose. Yeah, so that's the meaning of a margin call. Margin call and stop out. Two critical thresholds every trader must understand. They determine when your broker steps in. A margin call triggered when margin level falls to the broker's call threshold, often 100%. So it means that this happens when your profits are wiped out of your accounts. Broker allows you to deposit more funds or close positions. You can still manage your trades at this stage. Common thresholds: 100% or 80% depending on broker. Stop out triggered when broker level falls to stop out level, often 20 to 50%. Broker often auto closes. You're losing positions, no warning. You have no control once stop out begins. A positions close from largest loss first. Keep your margin level at above 200% at all times to trade safely and to avoid surprise stop outs. So this is very, very important, like when you're trading. That's why the thing like risk management is very, very key, because it helps you to know like when to, like the types of positions to put in, or the lot size to put in. So it's very, very key for you to understand like can I use a 0.01 or a 0.02? So it's very, very key to also understand that. Common mistakes to avoid. Once you understand the terminology, avoid these traps that catch beginners off guard. Using maximum leverage on every trade without a stop loss. Confusing pip value across different lot sizes and pairs. Opening lot sizes too large relative to your account balance. It's very, very key to remain within the parameters of your trading account. Do not risk too much, or do not open like very, very large lot sizes on your trading account. Ignoring margin levels, only checking profit and loss. So it's very, very key for you to also understand the margin levels, or to also not ignore the margin levels. Especially only focus on only your profit and loss. It's very, very key for you to also focus on also the other things. Assuming 1 pip always equals $10. Only true for USD standard lots. Topping up a losing trade just to avoid a margin call. So it is also very, very key to understand that you shouldn't only just, it's very, very key for you to understand you should only just focus on winning as a trader. So you should also focus on losing. So you should put parameters in place in case anything goes wrong in the market. So in case the trade is going against you, so you understand, no, I should maybe close out before I get a margin call. So we're going to end here for today. What we learned: a pip is the first decimal place. Second, for JPY pairs, pip value depends on lot size and currency pair. Micro, mini, and standard loss give different risk levels. Leverage amplifies both profits and losses equally. Margin is a deposit, not a fee. Manage it carefully. Monitor your margin level to avoid margin calls and stop outs. Thank you for watching this video throughout. And also in the next video, I'm going to look at things like risk management and also the others and also the strategies and everything. So like continue subscribe. Also like, subscribe and comment.